Well, good morning to you all. Thank you for coming along today to hear from the Artisanal Spirits Company, who announced their full year results yesterday. We published a note covering those results, which you can find on our website, but we are here today to hear from the management team themselves, who are going to take us through the presentation. That should take about half an hour or so, and then afterwards there will be an opportunity for Q&A. If you'd like to submit questions as you go along, feel free via the Q&A option in the Zoom toolkit, or you can certainly submit them after the presentation as well. But without further ado, I will hand you over to David.
Thanks, Hannah. I'm David Ridley, the Managing Director.
I'm Andrew Dane, I'm the Finance Director here at Artisanal Spirits.
We're absolutely delighted to have you all join us so that we can take you through our strong set of 2021 results. Firstly, I'd like to start with who we are and what we do. And the Artisanal Spirits Company is building a premium, direct-to-consumer, high-growth, high-margin global spirits group. And in particular, our main focus at the core of the business is that we're the owner of the Scotch Malt Whisky Society, and they're a leading curator and provider of premium single cask Scotch malt whisky, primarily for sale online to a discerning global membership. And that is the core proposition today, and I'll take you on to some new brand opportunities that we have. But really, we operate in this significant addressable market that you can see there on the right-hand side. $4.3 billion, fast growth, over 200% growth since 2010. That gives us a large audience in which to grow our membership. You can see there at the center of the page, we now have 33,300 members globally. And because we have a global membership that's really interested in that variety of these single cask offerings that we have, we also offer them a vast range of spirits sourced from other countries, over 20 different countries that we've sourced. But the primary proposition is still the variety that we have within Scotch whisky. So I mentioned at the core of the Artisanal Spirits Company is the Scotch Malt Whisky Society. We've looked beyond that to other opportunities. We've launched a blended malt small batch brand called JG Thomson that I'll touch on in a moment. But also there is an attractive $1.4 billion opportunity in the US around American whiskey in a fast growing market. Hannah, can we move on, please? On the next slide, here you've got Anthony from our Glasgow venue. Very happy to welcome you back now that venues have been able to reopen post-pandemic. And behind Anthony are some of the 900 whiskies that you can try when you're at the Glasgow venue. And I'm really pleased to say that over the last 3 years, we've received more than 200 awards across 7 very competitive spirits competitions as well. So many of those whiskies that you get to try will be award winners. And it's been a good start to life as a listed business for us, with results comfortably ahead of expectations and delivered against decisive moves into our strategic objectives. So a couple of highlights there on the page: 21% growth on last year to over 18 million. Importantly, as we build our cask stock, that converts into a retail value now of over £430 million, an increase of 26%. And Andrew will touch on high lifetime values and the metrics that go behind that. But in particular, across the strong results, we've got high growth in key markets. I think that's really central for us, is that we're concentrating on the big markets of China, the UK, US, and a number of others. And we had a very strong rebound in terms of the UK venues in the second half of last year. And we've made those decisive initiatives against our strategic objectives, such as the supply chain facility. And again, Andrew will touch on that. But also, not announced at the time of the IPO, we've also increased our interest in the Asian joint ventures as well, increasing our share by 10%. Hannah. Andrew.
Thanks, David. And overall, it's been our best ever year. So there's quite a lot of highlights to draw your attention to here. And as we move across the page, firstly, that growth, substantial growth and comfortably ahead of market expectations. And that's both revenue and membership. Importantly, not just top line revenue growth, but expansion in gross margin as a result of the long-term suspension of US tariffs, meaning that 21% revenue built 27% growth in gross profit. On membership, again, as well as that top line growth of 18%, really pleasingly has been the improvements in retention, now up to a global average of 77%. And lifetime value is the outcome of that multiplier effect that you see in the business of having a growing membership, sticky members, high spending, combining with our high margin model to deliver substantial expected member lifetime value. On the right-hand side, on stock, you see something similar from that multiplier, where we're seeing a combination of volume growth from our investment in cask, particularly younger and new make that we'll talk about later, combining with growing average selling prices, delivering that substantial increase in retail value, up 90 million to over 430 million pounds. Thanks. Back to you, Anna.
So you'll have seen some of this before, but we've now put together our strategic framework on a page, and that is about doubling sales by 2024. We've got a very clear purpose here. Captivate a global community of whiskey adventurers, that audience that I was talking about, that audience that ultimately underpins that $4.3 billion market opportunity. I've explained the proposition before, and this strategic framework connects purpose to proposition to ultimately that ambition of doubling sales. And there are clearly drivers within that ambition. And most importantly, we have the strategic growth pillars, and I'll cover off those in a little bit more detail on the next slide. Thanks, Hannah. So here we have the 5 strategic growth pillars. And across the page is what we said at our time of IPO that we would do and what we've done. And importantly, within the growing membership experience proposition, there's a number of facets in terms of growing in those key markets. You saw earlier, 57% membership growth in China, 18% in the US, and 20% in the UK. Enhancing our digital experiences. We've been rolling out the big commerce platform, and it's about providing the best digital experience, an ever-expanding digital experience for our members, but also about providing platforms for the various brand and market opportunities. So last year, delivering a .eu site post-Brexit, and for the JG Thomson opportunity, a .com site as well. And we've made strong progress against the value creation side as well. And we'll cover off that in a bit more detail as well, as with the complementary brands. Importantly, we need to have a talented organisation behind this to really drive forward our strategic initiatives and make sure that we've got an engaged team that are engaging our members and making this whole proposition a really exciting one. Hannah. So moving into membership experience proposition, there's a number of points to highlight on the next slide. So coming up on the next slide, Hannah, you can see on the right-hand side that 33,300 members that I mentioned earlier. But importantly, that point that Andrew made about the growing retention rates, up 7 percentage points. And that's really down to the work that we're doing around the membership proposition, the content delivery that we're doing, improved web experiences, all of the elements there, the return to venues as well. But we've had that strong membership growth across the key markets. Importantly, a very strong tenure within the UK EU markets of 9 years. And we've overcome the difficulties of Brexit, and we've now got a route to market that is really being enjoyed by European members, whereby they're getting bottles within days of their order. And that really all culminated at the end of last year, where you can see a bit of a hockey stick in terms of global membership. And I believe that that really sets us up very strongly for 2022 in terms of a tailwind as we move into this year. Hannah. Andrew.
Thanks. And Dave's been setting it there around membership growth. And here bring to life that membership value. Overall, we generated almost £10 million worth of contribution last year. As I say, really pleasingly, we've seen an improvement in retention and reduction in churn, the members leaving the society. And overall, that gives us an expected lifetime for new members of over 4 years and improving. Now, the maths across the bottom read so you can see how that contribution goes across our average membership. So average membership during the year, just over 29,000, giving an average contribution per member of over £330. And that's up 20% year on year. But importantly, lifetime value is the outcome of our investment in membership growth, membership loyalty, and membership engagement, which are the factors that we want to drive. We want a happy, engaged membership which drives the spend and retention. And actually, you can almost look at that back to front and say the lifetime value, what we're really trying to drive is increasing retention, building the number of expected years, increasing spend, improving margins, driving up that contribution per member, delivering increased profits in the long term and return to positive EBITDA in the short term. Thanks. Hannah, if you want to flip on the next slide.
So across here, you've got the sort of journey that we've had in terms of e-commerce and digital content. I won't hark on the past, but certainly we made strong delivery against our objectives in 2021. Those that I've noted in terms of the new websites on the BigCommerce platform. But within digital content, we've now got Unfiltered, our membership magazine, now fully digital, and moving from a quarterly edition to monthly new content being delivered, and opening up other channels such as YouTube with virtual tastings. Moving ahead, there'll be more instances of the BigCommerce sites supporting Japan, Australia, and so on, but also making sure that the experience within venues is also digitized more and more engaging for members as well. And on the content side, really pushing ahead towards having a global community of member mobile content, a sort of content hub, and more CRM content delivery. So a lot more to come in that particular area. Hannah, if you can move on to the value creation slides for Andrew, please.
Thanks, David. And the third pillar is around value creation and improving margins. And there's 3 strands to this that we'll talk through. The first is around growing our spirit stock and value. And that's expanding that fantastic, unique and vast range of outstanding spirits that we hold. You can see that increased retail value to over £430 million. But also it's the right mix of the right products. So it's the right bottles, the right flavour profile to cover everything that we plan to sell all the way through 2026 and most of the way through to 2028. But importantly, from a margin perspective, it's about buying more young and new make spirit, the same fantastic quality spirit from the same distilleries, but buying it earlier and capturing more of its value. And we've done that through both ad hoc purchases, adding an extra 1,000 casks of new make spirit this year, as well as an increased number of rolling new make contracts, now covering 275,000 bottles per annum across a wide range, over 15 distillery makes now covered on those rolling agreements. In the bottom left-hand side, you can see the value impact of that, moving from the cost of over £6 per bottle for the stock that was being used last year, which was bought when it was ready, largely matured, through to less than £2 per bottle for the new make. And over time, the difference between that £6 and the £2 is an extra 5 percentage points onto margin over time. On the next slide, we'll then talk a little bit about the ex-sherry cask programme. And to be clear, this is about buying more ex-sherry casks and allowing an expansion of our ex-sherry matured whiskey. And the reason is members love sherry whiskey that's had a sherry influence on it and are willing to pay a further premium price for. The left-hand side, you can see an ex-sherry cask typically costs round about £500 extra. Based on 250 bottles per cask, that's an extra £2 per bottle. But the extra price impact, round about £5, generating a substantial payback. And then over the life of the cask, we can bring that sherry influence over a period of up to 20 years from that active wood. On the next page, you'll see the final of the 3 strands, and that's around the supply chain facility, known internally as Masterton Bond. And as a reminder, there's 2 key parts to this. There's the financial benefit, margin upside of around 2 percentage points, which we should get next year once the facility is fully operational, but also the operational benefits of bringing in-house some of those services which are currently outsourced. So cask storage, around about 20% of our casks could be stored, current casks could be stored in this facility, bottling production, finished goods storage, and pick, pack, and dispatch and order fulfillment, all able to come in. On the next page, you'll see a picture of a big empty warehouse. Pleased to say it's no longer empty. So our site manager, Gary, an excellent addition to the team, joined at the end of February. We've had the steel arrive for the cask racking. That's now in sight. The initial pieces of bottling production equipment have also arrived in March. So initial work's now well underway and on track to be operational in the second half of this year. It'll be great to see and a great addition to the business.
Fantastic. Thanks, Andrew. Hannah, onto complementary brands. The first being J.G. Thomson. Now, for some of you who are familiar with Scotch Malt Whisky Society will be familiar with the vaults. And J.G. Thomson was the previous owner of the vaults before the Scotch Malt Whisky Society purchased it. J.G. Thomson was a renowned wines and spirits merchant amongst Edinburgh, and importantly, one of the business partners of the business was the Usher family, who were quite famous in the blended whisky market at the time. We've seen a trend in the market of consumers moving away from mainstream brands and wanting small batch experiences. And this brand will focus on small batch blended malt whisky. You'll see on the right-hand side the 3 core expressions: sweet, rich, and smoky. They have a price point of £43. We have some limited edition products that range up to £200. And on the left-hand side there, a rum and a gin to add to the repertoire of the brand offer. The brand open to everybody. We have a direct-to-consumer e-commerce channel in the form of jgthomson.com, but also we've got traditional distribution channels amongst whisky bars and retailers as well. The brand was launched in November of last year, so early days in terms of sales results and distribution gains, tens of thousands of pounds of sales in the latter part of last year. But the main focus of this year is expanding that UK distribution, and discussions are well underway for Europe and the US as well. And what a great start to a new brand. Up there on the top right-hand side there, you'll see that we have already won multiple prizes amongst some of the toughest competitions. More recently, the IWSC, with one of the J.G. Thomson products scoring 99 points, one of only 2 products to have received 99 points. And late last year, in the spirits business Luxury Masters, also top trophy prizes and a number of golds across the range. So absolute recognition of quality in the bottle and a great start to a resurrection of J.G. Thomson. Hannah. And we see an exciting opportunity within the American whisky market. It's a significantly growing market, $1.4 billion in the domestic market. And importantly, at the price points that are relevant to us. And that premiumization trend is really being driven around the great number of distilleries that are emerging within the US, now 2,000. In particular, 200 of those are registered with the American Single Malt Whisky Commission. but that consumer trend, similar to the J.G. Thomson trend of people wanting small batch, single barrel offerings, has really fueled that market. And we believe that's perfect timing for a proposition that will concentrate on American single malt whiskey, because also there will be US legislation soon to define it as a category. And we believe taking our skill sets of understanding of a membership model, our understanding around single cask, or in American sense, a single barrel, to the market. But we'll do that with partners that have got a huge amount of experience in the US market. And the combination, the teamwork that will deliver, we really are very excited about the American whiskey opportunity. More on that in the coming months, and it's an opportunity for us in the second half of this year. Hannah. And all of this needs to be delivered by the right team. So we're building that team in order to deliver the growth ambition. So really across our culture, our team, and organisational development. On culture, we've engaged the team around what our values should be, and we've really come up with a strong set of values that you can see down on the bottom left-hand corner. We all share these values. We work towards being outstanding on these values. So therefore, we have a common goal, and we all work together. And as far as team is concerned, we've been strengthening across the board. We've had Mark Hunter join as our chairman, ex-CEO of Molson Coors. We've had Leslie Jackson join, ex-CFO with William Grants, and we've had Helen Page from Virgin Money, which is a digital bank. We've recruited across the executive team. We now have Rebecca Hamilton, who's ex-Jockey Club, so has quite a degree of experience around membership propositions, hospitality, etc. And she joins us as our marketing and e-commerce director. And that's allowed us to split the role that Kaya Ivalo had as the marketing and spirits director. So he can now 100% focus on our whiskey creation and our whiskey development. And we've got new positions and new team members joining as we expand the team. And in terms of organisational development, we've launched a leadership development program and a range of training for the team to make sure that they grow with us as well. Hannah. Andrew.
Thanks. So I'll now take you through some of the financials, and I'll start with revenue, giving a little bit of insight into the figures behind those messages that we landed earlier. Around that clear growth in the US, strong growth in China, with revenue growth, but even faster growth in membership, setting us up for more growth to come in 2022. That strong rebound in UK venues. Second half of 2021, sales were higher than all of 2020. And importantly, for December 2021, despite the impact of Omicron during on, sales were almost back to the pre-pandemic level. So that's really good. It gives us a great basis into 2022. Obviously, the one that stands out there is Europe, which was going backwards last year. All of that decline happened in the first half of the year, immediately post-Brexit, when delivery times were 2 to 3 months. By the second half of the year, it was 2 to 3 weeks. And importantly, at the start of December, we implemented a new route to market, product in market in advance of going on sale in a German warehouse. And we're now back to 2 to 3 days. And we've seen a real uplift in European member numbers since that was implemented at the tail end of last year. So overall, really good results for the year, but also a really good basis for delivering more growth in 2022. On the next page, we'll go through a little bit more across the wider P&L. And really important to note here is, as we set out clearly at the time of the IPO, we remain very much in a growth and reinvestment phase, building profitable revenue growth, gross margin improvement, but reinvesting that into the cost base. So we have a very clear goal of returning to positive EBITDA in the very near term and delivering bottom line profitability in the medium term. But in the meantime, building that platform of people and systems to deliver the growth that we want to achieve that ambition of doubling sales by 2024. So all on track for that. Then the final page around financials, we'll see that bit of a wall of numbers around balance sheet and cash flow. The key message to draw out here is a strong and well-capitalised balance sheet with almost £25 million worth of net assets. And importantly, that's carrying that spirit at cost. But we know from the reinstatement valuations, there's almost £10 million worth of upside available on that cash. That's not included in the figures. So a well-capitalised, asset-backed balance sheet. And as I said, we now own pretty much all the stock we're going to sell for the next 8 years, which also gives us significant protection against inflationary pressures, as well as all the other advantages that it brings. So it's a really, really strong position to be in as we look forward. And I'll pass back to David to take that on and talk about what's coming next.
Great, thanks, Andrew. So I'll look at current trading in 2022 and the outlook moving forward. So in summary, really good progress with lots of potential. You can see there on the right-hand side, the trajectory towards that doubling of sales by 2024. And importantly, 2021 has delivered a very strong step towards that. And we've made a strong start to the financial year. To the end of March, our revenues are ahead over 30% year on year. And that's certainly benefited from cycling over the UK venues in Europe, but it's certainly in line with our expectations, and there is strong underlying growth elsewhere in the business. And you'll see that global membership has further improved in only the first 2 months of this year, now over 34,000 members, an increase of 900 members in just 2 months. So what do we expect for the remainder of 2022 and beyond? Well, from a sales point of view, we've got strong metrics that are driving the sales, and it's not just in one market; it's across the diversity of our key markets. And remembering that each of those metrics multiply together to support that sales growth. And importantly, we've made decisive steps towards our strategic pillars. That of the supply chain facility that Andrew just went through, the improvement that gives us, the steps that we're taking towards the new and complementary brand opportunities, such as the American whiskey opportunity. And importantly, from the digital experience point of view, rolling out better and more engaging content on our digital platforms, and ultimately a better user experience for all of the members to have there. So really, it's a combined effort across key markets and a really strong market opportunity ahead for us. So I thank you for your attention on the presentation. Hannah, I'll hand back to you in terms of questions.
Gentlemen, thank you very much for that helpful canter through. So let's begin. How do the partner bars work?
Okay, so the partner bars, we sell a range of products to them, basically at member prices. They are free to sell that to the public
as drams.
And we ask of them to give incentives to members in the form of maybe a free plate of peanuts or a discount on the drams. But we work with them in order to hold tasting events in their venues to attract people there. A recruitment tool for us in terms of a member type level of activity. They represent, depending on the market, 2-3% of sales. In Japan, where there's a really well-developed partner bar program, something more in the sort of early double-digit in terms of total sales, which has ultimately affected Japan in the 2021 sales because of the pandemic and having a bigger proportion of the partner bars. But it makes us ultimately more accessible to members and the public, and it's a sort of low-cost, zero capital platform for us to make sure that we've got engagement points beyond just simply e-commerce and buying bottles. And that, first taste experience of the Scotch Malt Whisky Society whiskies are really epiphanies for a lot of people to become members.
Thank you, helpful. Could you talk about competitors, particularly in the US, China, and Japan?
Okay, well, first and foremost, I think our business model overall makes us, quite unique and very, very special. We have vertical integration in terms of the production process, in terms of, we're taking often now new make spirits straight off the still, putting it into the cask of our choosing, maturing it through, putting it through our expert tasting panel, bottling it with, character and a story around it. And then we're making it available through our exclusive online, offline, omni-channel offering, e-commerce, venues, partner bars, events, and then we've got our content delivery. And we really see nobody, certainly of any sort of scale, doing all of those elements. So from a competitor point of view, we have obviously, competitors that are doing small parts of this. So, we obviously have within the vertical integration, the likes of Gordon MacPhail, but then they're selling into a wholesale network and losing visibility of who their consumer is. You could then say Master of Malt, who are obviously an online retailer. They have a little bit of the vertical integration with the boutique company, but generally they are an e-commerce retailer. So there are competitors out there, but nobody that gives that sort of full service vertical and horizontal integration.
Okay, thank you. Right, we've got a couple of questions here on sort of geographical reach and ambitions across these different regions. So first one here, does the marketing strategy differ much in Asian countries compared to the West? And how do you acquire customers in these markets?
Yeah, I think the core brand proposition is quite consistent amongst the global offer. And that's really important for us. But clearly there are local differentiation that we need to apply, notwithstanding, obviously, the conversion into local language with regards to our content. And, the audience are intrigued by different things. In China, for instance, they want to understand more about, whiskey making and what goes behind it, where in the UK, there is a much stronger understanding of that. So content will differ with regards to that. The channels that we operate in are slightly different, where, for instance, in Europe, as I mentioned earlier, that physical channel is really important. So, being able to, physically attend events, whiskey festivals are really important for recruitment for us, which, was a hindrance over the pandemic there. But, in the US, digital marketing channels such as, influencers, whiskey bloggers and getting them to talk about us is really important. And, in China, being available on platforms like Tmall and JD.com, increases our reach and awareness. So we do have a market by market approach based on the way we need to interact with potential members and members in order to make sure that we're getting them the most engaging experience possible. Okay,
and then looking towards Africa, are there any plans to tackle these countries, to target them? Premium whiskey is quite popular in some of these, and they might be smaller, but is there an opportunity with lower competition?
Yeah, well, I mean, we're certainly in South Africa at the moment, which is probably the most premium and largest of the markets. And we, continually evaluate and explore opportunities. Regulation is something that we do need to consider in terms of, things like product registration for a single cask whiskey product. It's not necessarily in all markets the easiest thing to do. And it's also finding the right partners within those markets. But we are always exploring additional geographies.
And I think an example there in South Africa is really good. It's relatively recently been added as a franchise. And the franchise model is a really good way to seed new market opportunities to see whether that capacity was relatively low risk or management time or focus needed to kind of get something operational.
Okay, thank you. Now, what about your route into the US? We've talked about marketing, but in terms of selling, would it be a JV or a franchise model as you've done in the past, or something else?
Does this question relate to the
American
current
whiskey?
I've just written, what's your route to the US market?
Okay,
So
so
perhaps you should expand on that point.
well, perhaps to be able to answer both instances, I mean, it will be the same as what we're already using as the SMWS. It won't be through exactly the same channels, but the actual route will be an absolute mirror of that. But there will be a separate structure operating that route. It's slightly different at the tier 1 level, where we're using a domestic product rather than an imported product. But apart from the nuances there, the distributor and retailer channels will be the same.
Okay. Which market do you think will be bigger in 5 years' time, the US or China?
Well, that is a competition I have with both leaders of those markets vying for that. I mean, you look at the numbers, you would say that the US should be the bigger of the markets. It's got a head start in terms of the development of Scotch. It is, widely more wealthy in terms of the middle class and upper class, in terms of the number of people. And it's a big population of people to be going after. But by the same token, China's a really exciting market. You've got an emerging middle class, a real acceleration across there, and they're really into international products. Being seen to be, understanding, discerning products. So they're two fundamentally different dynamics, and both are really exciting for us.
You've spoken there then about exciting growth opportunities. We've got a lot of callers on today who are our shareholders and have been for some time. How are you going to manage the opportunity for growth around quality of whiskey? As you obviously bottle the stuff younger and faster to meet demand, do you manage to maintain quality on that journey, or is it a bit of a catch-22?
Okay, first and foremost, we will never compromise on quality. We have the tasting panel that gives the integrity to that process. Now, as a product portfolio, we are not bound by the sort of constraints of a traditional whiskey company who might have a 10-year-old, a 12-year-old, a 15-year-old, and they need to bottle a certain volume at that age range. And ultimately, if we have something that doesn't pass the first time in the tasting panel, which is quite rare because we're very good at maturation and understanding when something would be ready, even without having a first taste of it, is that we can put in another 12-year-old or a 10-year-old to replace that product. So we can constantly evolve and be nimble and agile in regards to that. And if we had to, we could potentially extra mature that 11-year-old product until it gets to that point of the right quality. We've laid down a huge amount of stock, in anticipation of that future growth. So we can ebb and flow, and we don't have that same constraint of a traditional whiskey company.
Can I just also make a point of clarification, because it maybe wasn't clear? We are buying spirit younger, but it is the same quality of spirit from the same distillers, and we are maturing it for longer ourselves. On average, we are selling product when it's 12 years old. Obviously, some is slightly older, some is slightly younger. We are not changing that. We're saying that we are buying the spirit earlier in its life, and we are doing more of its maturation, which I would argue gives it better quality. But I think that's maybe was slightly unclear and was part of the reason for the question. This is not about selling younger whiskies. It's about buying younger whiskies and selling the same fantastic quality. And
improving your gross margin.
Exactly.
Excellent. You've answered my next question. Thank you, Andrew. It wouldn't be an understatement to say I've probably got about 10 questions with people who are obviously disappointed with the share price performance over the last, since IPO. So I know you guys are not in charge of macro global events, but is there anything that you would like to say to the shareholders who are concerned?
Well, I mean, it's not management's position to comment on the actual share price itself, but I can tell you what we are doing earnestly is making sure that we deliver on what we've said that we would promise to the market, and meet and beat those promises. And we are doing that, and we've got a huge amount of confidence in and around that. And coming to investors and representing those results, answering points of clarification so that they understand what the proposition is. And fundamentally, we are a distillery-like proposition here in the way we're buying stock, laying down stock. So we believe that we inherently have a high valuation with a product that has high value, high margin in high growth markets.
Okay, thank you. Next up, is the 8-year of stock of whiskey based on current sales or forecast sales?
It's based on forecast sales. So we basically have all of that in hand. It's inflation proofed because we've already bought it at those prices.
Brilliant, thank you. A gentleman here who's obviously attended some of the tasting events. Is there an opportunity to do a better education program focusing on key elements of appreciation, nosing, flavour development, etc.?
Yes. more on that to come.
Excellent, excellent. Venues around the UK, TBC. Great, okay. And another one, are there any plans to open more SMWS venues in the UK following the success of the Glasgow venue? We know.
Answer is again yes. I mean, part of the IPO proceeds were earmarked for exactly that. Some of it was earmarked for the refurbishment of the vaults, but certainly we're exploring opportunities, within the context of likelihood. Manchester looks like an attractive city, no venue there currently. Strong whiskey consumption there. So that fits a good profile of an opportunity for us. But we'd also like to look at taking the venue proposition internationally. And Germany would look an attractive opportunity, a good sized membership base at the moment, strong economy, from a regulatory point of view, relatively, stable environment for us to be in. We're looking at other opportunities, but certainly, stability and regulation are things that we need to be just mindful of.
So apart from access to some delicious whiskey, what other investor benefits can people expect this year?
Well, we'll have the opportunity to have a investor exclusive bottling later this year. So that's one opportunity. There will be shareholder events being offered. One in the latter part of May, early June coming up. So there will be various events, a product, and obviously there are the various inherent benefits around the discounted membership, the vouchers, and so on.
Okay, thank you. A question here asking if the presentation is on the site. I know certainly the recording of this presentation will be on our site shortly, but I'm assuming the presentation is also on yours. If
it isn't already up, it will be up imminently. It was being added, so yes, it will be available shortly.
Thank you.
And that's on the artisanalspirits.com under a section around investor information. All previous presentations and reports are there, so you can always have access. There's also a short video around about 5 minutes, 5-minute pitch TV of giving a summary of the year.
Wonderful. Final question on character of the whiskey. I'm clearly not connoisseur enough, but there is a view that some of the character of the whiskey comes from maturation at the distillery where it is made, for example, the Islay malts. And obviously by you taking them away from that earlier, is there a risk to quality?
No, absolutely not. It's not to say that we're not, in the case of Islay, that we're not actually maturing it on Islay itself. That's to say also many of the Islay distilleries take the spirit off in bulk tanker and fill it into cask on the mainland as well. But, you know, the sort of inherent balance of flavour and character is that around about 60% of the flavour of a whiskey comes from the cask itself, 40% from the spirit itself. Obviously, in the case of a peated whiskey, that is more pronounced and more sort of dominant with regards to that. But we will make sure that the maturation is, you know, well understood in terms of that.
Yeah, and worth, as David pointed out, that when we acquire a cask, often it doesn't move. It still sits at the distillery. It's just we now own it. So the timing of the acquisition isn't the same as moving it.
Helpful, thank you. The JW Thomson brand, does it have separate management? Obviously, it's a sort of a different approach. So is it a distraction, or how's that fit within the business structure?
I mean, there is a dedicated team as far as the, you know, the sales and the marketing are concerned with regards to that, and we're developing, you know, further support in and around that. But it is a different proposition in terms of the way we acquire the spirit, etc. So it is not a drag on management's time with regards to that. That's why it's a complementary brand for exactly that purpose.
Well, that's it for questions today. So, gentlemen, thank you very much. We look forward to hearing from you again in 6 months' time. And any final words, David?
Well, as I said earlier, you know, a really strong confidence around our delivery on the doubling of sales to 2024. You know, very much underpinned by our decisive steps forward in terms of our 5 strategic pillars and the delivery on those. And then ultimately, you know, driving those key metrics that Andrew and I have covered off, and that multiplier effect of an improvement in all of those builds a bigger outcome at the end of each of the years. So, you know, confidence looking forward, high value, high growth business, and, you know, ultimately one that should be recognised in the market for exactly what it is.
Many thanks to you both.
Thank you very much.
Great. Thank you, everyone. Thanks, Hannah.